Okay, so here we are. This is gold futures. We are today, September 1st, 2025. And what I'm showing you is a picture from TradingView. This is gold futures. And we're on a weekly chart. Now, for those of you that are new, you'll see these trend lines down here at the bottom. These are moving averages. This is the, I believe it's the 40 MA, and this is the 20 MA moving averages. So on most of your trading and chart programs, once you set the moving averages, like let's say a 200 or a 50, no matter what time frame you move on, the program will automatically put the moving averages for that time frame. So if it's a hourly chart, it'll be a 200-hour moving average or a 50-hour moving average. So it's important to understand, because those time units are based on trading days or trading units. So if you kind of do the math, about 200 trading units in day terms is about a trading year, roughly. It's not identical or perfect, but it's close enough. And so these moving averages tend to become self-fulfilling prophecies for traders. But let's look at this ascending triangle pattern on gold futures. So I'm going to kind of try to zoom in a little bit here so you can see basically what the pattern was showing over the past. This is a weekly chart, so all the way back to the beginning of the year, is that we hit 3,500 or almost, and then it falls back. Let me move this purple triangle out of the way, see if I can. Just delete it, I guess. There we go. Okay, so we hit 3,500, it falls back all the way down, right? What happened to the people that bought in up here at the top? They lost money, right? So they got all excited, they bought in at 3,500, and immediately it falls back, right? And then it gets to a point where people believe that it's, now time to buy, and so they start moving up. They buy it back up, but then the guy that bought up here at the top, once it gets back up to his break even, like a lot of people, psychologically, we go, oh, I just bought something and it dropped in value. As soon as I get break even, I'm getting the hell out. And so that's what happens. And as people get back up here to break even, they start selling to take their money and go elsewhere. And then we have another sell-off again. So this continues on until you have a bullish, until there's no more really people that had bought in at that price, and the people that are left are willing to hold, and then there's new buyers coming into the market. So this happens 2 or 3 times, and then boom, you get to a point where the buying pressure is so high, you push up above 3,500, and then now you get the bulls piling in. So this is what's called a continuation ascending triangle pattern, because you have sets of higher lows. So if you look at the lows here, this is a low, higher low, higher low, higher low, higher low. But at the top you have overhead resistance, so you're not making new highs, but you're still making higher lows. So once that resistance gets punctured, then you start having new highs, and then you'll have higher highs and higher lows. Now, a lot of this comes out of many trading books, and I'll put in the comments below the trading books I'm using. The one that I really swear by is Steve Nissen's Japanese Candlestick Charting Techniques. It's been around for a long time, and it goes through the history of how the Japanese developed these candlestick charting patterns. And quite honestly, pretty much everything in that book tracks right along with what's going on in the markets these days. So let's just put it here on the monthly chart, because months are important, because big funds mark to market at the month. They get paid on the month. And so they like to close their books around the month. So the month is a big deal. We just had a month close, and we closed the month. Well, this is the new month. We closed the month pretty much at all-time highs on gold. And then we opened the next month, which is this morning, and we're still breaking up to new highs. So what we're seeing, it's kind of a breakout in gold, and who knows where it's going to go. My guess, based on technical analysis, if you kind of look at, it's not scientific at all, but if you kind of take your fingers and measure the distance between these two candles and then kind of pivot up at the same angle as your lower high or your higher highs, it's looking like 4,000 is the target. And the reason I say 4,000 is because market likes round numbers. And yeah, it could be 3,900, could be 3,800, could be 3,750, but a nice round number when you basically look at how long it's been tracking in a sideways pattern at that all-time high, my guess is 4,000. I would say if right now I own a bunch of gold. By the way, disclaimer, I do own a bunch of gold. Several shares of, about 100 shares of GLD and two futures contracts on gold. So I've got my money where my mouth is, and I'm expecting this thing to ride up to 4,000. So jump on, boys. Let's do it.